In this video, we look at the long-term supply and demand factors that could drive the performance of the copper price. Canadian Mining Report is not a financial advisor. This video is for informational purposes only and does not constitute investment advice. The copper price more than doubled from lows just above $2 per pound in early 2020 to reaching nearly $5 per pound by May 2021, but eased to just above $4 per pound through most of the rest of 2021. It made another run to almost $5 per pound in early 2022 before plunging to lows of $3.2 per pound in July 2022. The price stagnated through third quarter of 2022 before a rebound started in October 2022, which reached $4 per pound in January 2023. However, a pullback followed on rising recession concerns, which was exacerbated by the banking crisis, and the copper price has now declined to $3.69 per pound, below the average since 2020 of $3.73 per pound. Beyond these short-term demand issues, the price may also be facing pressure from a shrinking deficit in the copper market and an expected large surplus by next year. According to data from the International Copper Study Group, the copper market has been in deficit for most of the past 20 years. There were large surpluses only from 2005 to 2009, reaching well over 300,000 tons for 3 years, but considerable deficits ranging from 100,000 to over 400,000 tons from 2010 to 2022. However, the market is forecast to shift to a marginal 12,000 ton deficit in 2023 and a major 590,000 ton surplus in 2024, by far the highest of the past 2 decades. The surpluses in the early to mid-2000s were driven by a collapse in demand, which here is shown by refined usage, which declined by 1.1% in 2005 and 2.2% in 2006, while refined production grew 4.1% and 4.3%, and refined usage fell 0.8% in 2008 because of the financial crisis, while production rose 1.7%. However, from 2010 to 2022, refined usage grew 3% per year on average versus production growth of just 2.7% per year, driving considerable deficits in the market. While the ICSG forecasts demand to grow 1.4% in 2023, supply is expected to grow at double this rate by 3%, with the gap widening in 2024, with demand growth at 2.8%, but supply rising 5.1%. Looking at the recent monthly copper demand-supply balance, the trend line of the series shows a move towards a surplus, especially in 2023. There were only 4 months in surplus from June 2021 to November 2022, but all 4 months from December 2022 to March 2023 had a surplus, with January and February 2023 having the largest surpluses of the period. The International Energy Agency also has longer-term copper demand and supply estimates to 2030, which suggest that the surplus may persist for another 3 years. The IEA forecasts a rise from 20.7 million pounds of copper production in 2020, rising to a peak of 23.4 million tons in 2024, and then contracting to 19.6 million tons by 2030. On the demand side, a forecast based on stated government policies would see a considerable surplus in production through to 2024, a balanced market from 2025 to 2006, and a considerable deficit only arising from 2027, which suggests that the pressure on the copper price could persist for a considerable period. Even a demand forecast based on sustainable development policies, which would require a significantly higher amount of copper, would see a surplus in 2023, a balanced market by 2024, and a significant deficit only by 2025. However, this scenario would require some major shifts by governments that might take several years to be implemented, and thus could be less likely to drive up demand this year or even into 2024. For more information on copper and other metals and junior miners, click the link in the description or bio below to go to www.canadianminingreport.com.